Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. I'm really liking the new June 2023 leaps. That's about 25 months away from the time of this video, and apparently in September, 2025 leaps will also be available too. FYI, leaps is just a call option with a 1 to 2 year expiry date. I've taken a new view on these assets now. Call it a paradigm shift if you like, and it's due to the fact you can now buy leaps so far out for Tesla. When Tesla's stock price increases to the next level, I think it will happen quickly, all within the space of about 3 to 6 months, and it will likely go 2 to 3 times within that period. Maybe mid-2023 the stock is around $1,200 and then jumps to $3,000 by the end of 2023. All that gain just in the short space of 6 months. My intention is to be holding as much Tesla stock as possible during that period, or perhaps controlling as many stocks as possible is a better way to put it. Every time the option's expiry date is further out, then the higher the chances the options go through this next level of Tesla's stock price. My guess is taking the stock price to somewhere around $2,500, but somewhere between $2,000 to $3,000 is reasonable. With an expiration date now in mid-2024, it increases the chances that this price jump will occur compared to the other expiration dates. When the stock price does jump in this fashion, I think the cause will be when the 4680 sales reach a run rate of around 100 gigawatt hours a year. As soon as Tesla hit that, then the stock will be ready to hit the next level. And in my opinion, as credible as you deem that, I think it will be the 4680 sell ramp that gives Tesla the best chance of hitting this next level of stock price. Although it may not come into effect instantly, the market may first want to see how much this new cell production affects earnings first. Don't expect, just because you realize what it means that Tesla have hit volume production on the 4680s, that the rest of the market will. I thought the same when Tesla first hit volume production. Wow, over 20,000 units of the Model 3 produced in just a month. I was under the impression that this was the breakthrough we were waiting for. Yet the market decided to punish Tesla's stock price to under half of its all-time high. This was madness. I think the market will need to understand the 4680 production in the profit and loss statements, which could take a further 3 to 6 months until fully felt after the 4680 ramping. In the meantime, I'll be trying to leverage as much as I can, possibly buying a lot of call options about 6 months out and out of the money. This is something I believe will happen, so I'm going to put my money where my mouth is. I won't use more money than I can afford to lose, but it will be very leveraged. My point is, I'm trying to find ways of extending my time to increase my chances of leveraging this level up. Whenever the stock price rises now, I sell off some of my options with shorter expiry dates, and then when the stock dips, I replace the ones I sold by buying a new one with as long an expiration date as possible. The longer the expiry date, or the longer I've extended the time, then the longer period I have covered in the chances of catching Tesla during a stock price level up. I only spend about 30% of the stock price on an option. So if the stock price is $800, I'll only spend about $240 on an option. So I end up being just over 3 times leveraged. This generally affords me a leaps contract about $100 out of the money. I can trade in and out though, which also enables me to increase my leverage again. Now what's my worst case scenario of trading? Now this is my worst case in my scenario with my targets. Yours will be different. Now my initial strategy was to buy as many leaps as I could, hodl them for a couple of years and exercise them. Let's say I had 10 leaps I wanted to hold through this period initially. Well, since then I've already sold half of these leaps to take a decent profit, and I'll rebuy more of them again when they're cheaper, with longer expiry dates. But now I'm taking on a full-on trading strategy, and we know how dangerous and risky trading is, not to mention options trading especially. But in my previous strategy, I was holding 10 leaps, perhaps with an average expiry of around 12 to 18 months. I sold all the leaps with the shorter expiry dates and kept about half of them, the ones that expire in 2024. What have I done? I've now risked that if Tesla's stock price shoots up at any stage, then I will have missed out, as I no longer have so many options. This is my worst case scenario from my previous strategy. On the other hand, Tesla's stock price might drop, and of the 5 leaps I sold, I can then purchase perhaps 10 leaps instead, with longer expiry dates, thus increasing the number of leaps I hold with a longer average expiry date. Yes, there is a risk in this strategy, but when it's mapped onto my previous strategy, the only risk I can see in addition to the previous strategy is the risk of potentially missing out. However, the opportunity this offers, in my opinion, makes up for it. The trick will be to never sell any leaps at a loss. If I never do that, then I'll never lose any money, as long as by the time mid-2024 rolls over and Tesla's stock price is up at around $1,200 or so, I still won't actually lose money. In fact, I actually do put a lot of effort into researching what Tesla's stock price will be around then. However, if Tesla stock is not doing well around that time, and my leaps all expire worthless with this updated strategy, well, it made no difference. As with my previous strategy, that would have occurred too. Except with my updated strategy, at least I'm replacing older leaps with newer leaps, so it does further increase my chances. Now I have to obviously mention the risk of options trading. It is advanced, and the odds are stacked against you at the best of times, but this being Tesla, and the macro market being what it is, well, there's going to be some volatility. Unless you're a really advanced trader and far beyond me, I would suggest not playing with more than you can literally afford to lose. I sold 10% of my Tesla shares to do this, to give you an idea of the level of risk I was willing to take on. I recently saw some of my leaps when the stock price was probably an average of around $1,100 and had bought these leaps when the stock price was down around mid-600s last year. Now, although that was a great return, remember the stock was also up 50% from when I was buying from when I sold. You need to factor in buying the stock as an opportunity cost. My leaps and cash profit are now around 18% of my portfolio, up from the initial 10% I sold, despite a hit on some short-term options earlier this year. They were up to 25% at one stage, and my target was 40% by the end of 2025. Wow, 10% to 40%? I'm aiming for a quadruple return in just 3 more years. That's pretty ambitious. No. This is Tesla Economist. Pretty ambitious is not exciting enough. What am I talking about? Well, I'm talking about using the proceeds from selling 10% of my shares and placing them in leaps to turn them into the value of 40% of my shares. So why is that not 4 times return? Well, it is in a sense, the sense being 4 times as many shares, but the share price might have also increased 3 times too. So my targeted return might end up being more like 12 times, and only by 2025. So perhaps with my trading, I could eventually accumulate enough shares to have an impact on my position. At the same time, the odds are crazy stacked against me for trading shares, even further stacked against me trading Tesla, and even further stacked against me exponentially trading Tesla options. Yet I can't help myself. It looks so obvious that this is enough time to sort out the 4680 lines. And either way, I will keep trying to extend my length of expiry dates in my options to further increase my odds. To be extra clear, this is not some get-rich-quick scheme. This is an advanced trading strategy where you can lose everything you put in. I'm only risking 10% of my portfolio. This isn't for the massive fanboys who just have total blind loyalty to Elon and Tesla and want to find a way to leverage up. This is for people who understand options well and are already trading. I'm not trying to sell you the idea that using leaps will get you rich with Tesla. I'm saying if you put in a lot of work in studying the stock and are proficient with various trading strategies and believe Tesla will shoot to the moon in the next couple of years, then this derivative may be of interest to you. Although I'm happy to discuss any of your strategies you have on Patreon with you. Now, this is my strategy currently, and it has been going well. Since I started around June, my strategy has been evolving. But I think with options, you've got to stop and take some profits sometimes. Wow, some of mine were up as high as 600%, and I still didn't sell. It then dropped down a lot. So I'm not sure the hodl strategy is right with options. Even if I had just sold one, I had several that had similar returns around 500% too. I did actually sell one when the stock was 1180 with over 500% return, which is partly the reason I was playing short-term call options after that. I was playing with house money, so to speak. My strategy will continue to evolve, and I also get a lot of great feedback from you as well. But for me, this is probably looking like about a 5 times return on investment, if I get it right. At the casino with perfect odds, it would be a 20% chance. I ask you, do you think Tesla will have ramped to around 100 gigawatt hours before 2024? Well, do you think there is a higher than 20% chance that will happen? Then for you, this investment is asymmetric. Personally, I think there's about an 80% chance, or hopefully much higher, Tesla have reached it before then. We still have all of this year and all of next year. Some people might think FSD will be what makes the stock price jump, but I think it's got to come down to batteries first, as that is what will be noticed the most on the financials. FSD would still take a long time to have any noticeable effect on the profit and loss accounts. Years, especially robotaxis. We would expect 4680s ramping to have a much larger impact on profit due to it meaning that many more cars can be made. But maybe Elon can impress the world enough with his FSD that it will also make the stock jump too. And there are a few other events that could also make the stock jump in the meantime. There is one major event this year that we even have a date for now. We'll get the stock split announcement at the annual shareholder meeting in August, which is almost guaranteed to go through. It's also sounding like a potential 20-for-1 stock split, which I'm pretty sure is a good sign. So I'm trying to prepare to have as many options over that period as possible too. Hopefully buy some in the Q2 dip and sell them off after the split. This June 2024 leaps is also a hedge against more inflation or even hyperinflation. I know it sounds trite, but we are in unprecedented times, particularly when it comes to monetary policies. We can try and study as much history as possible, but at the end of the day, we don't know what will happen. We could see a ton more inflation or even hyperinflation and a dollar collapsing. Well, if that's the case, then it will cost a lot less to exercise your option in real terms. I'm not saying this will happen, I'm just saying that this is one other advantage with this derivative. It is somewhat of a hedge against hyperinflation, although in the event of hyperinflation, I'm not too sure how solid the economy may be. Of course, we are too likely headed for a recession sometime soon. The further out expiry date I can get, then the higher likelihood they will expire once we are out of the recession. Anyway, hopefully you all get to witness me making $1 million or 10 times return in this journey over the next couple of years. Or maybe I lose it all. Remember, this is an evolution from my previous strategy where I was simply holding 10 or so leaps until expiry. I think I need to be more active with these leaps rather than passive. I've actually not even bought one of these June 2024 leaps yet. I only have January 2024s. I think Tesla is going to move very exponential when these 4680 lines start to ramp up. And if I can catch that period leveraged with some leaps, then it's definitely going to be more interesting. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.